Welcome to Wall Street Unspun with your host, Peter Schiff.
But it's a giant bubble in search of a pin, and it's going to find one.
Are you confused with the ups and downs in the economy and what it means to you?
Don't believe the propaganda, and that's what it is. When you're listening to an analyst on a lot of these popular financial shows, you're not getting investment advice. You're getting propaganda.
Get ready to untangle the web of misinformation provided by the mainstream media.
These firms are trying to sell you stocks. Their real clients, their banking clients, are trying to get rid of stock.
And now, here's your host of Wall Street Unspun, the president of Euro-Pacific Capital and a licensed broker with a passion for truth. It's Wall Street Unspun with Peter Schiff.
Hi, everybody. It's Peter Schiff. Welcome again to another live episode of Wall Street Unspun, midweek market outlook. I am doing this show live, as I do every Wednesday evening at 8 p.m. Eastern Time, 5 p.m. Pacific Time. The show can be heard on my website at www.europac.net and also on shortwave radio, 5.07 megahertz. If you missed the live show or you have friends that you want to tell about the show, of course, they can watch it on my website. It also is there archived in podcast format. And also we began posting my video blogs on my YouTube channel, Schiff Report. So there are various places online now that if you don't catch the live show, or if you have friends that you want you listen to the show and you hear something that you like and you want to tell people to listen, they can go to my YouTube channel, they can go to Europac, they can download the podcast. Also, the number to call, toll free, if you want to ask a question or make a comment, 888-678-9597, 888-678-9597. First, I want to talk about the Schiff for Senate, the Senate race. Still, there's no official announcement yet on that candidacy. I think it's taken a little longer than I thought to try to get some of these ducks in a row before I could potentially announce my candidacy. But I am very strongly leaning in that direction, and as I've said, I think it's far more likely that I am running than that I'm not going to run. But I haven't officially announced my candidacy yet, so I'm still in the exploratory phase, the testing the waters phase. I've noticed there have been some people who have sent emails because we haven't sent any personalized thank you notes to the people who have donated. We've had thousands of people who have donated to the campaign. I'm looking on the Schiff for Senate website right now at schiffforsenate.com, showing 893,000 and change in donations. And, I know that there's been some automatic thank yous, I think, that go out the minute somebody donates online. As far as the people who have donated by check, I don't think anything has gone out. Basically, my thoughts on the thank yous are twofold. First of all, since I theoretically may not be running and I may be returning all of the donations, it's premature to thank people for their donation when I've said that if I don't run, I'm going to return the money. So I might be returning the money, in which case, I really wouldn't be thanking people. But also, the consultants that I have been working with, that they suggested, why don't you send out these thank you notes? And they put a budget of $9,000 to send them out. And I thought that was pretty expensive, to spend, $9,000 of the money that people have sent me to run for office, and simply using that money to pay for thank you notes. I wanted to try to find a more effective way to thank people than spending that much money doing it. And also, of course, if I don't run and I have to return all the money, then, of course, that $9,000 would simply come out of my pocket. I would have thanked people for giving me money that I didn't even keep. But in any event, I don't know. I mean, at some point, if I officially announce that I'm running, I do intend to send out some type of acknowledgement thanking the people who contributed to the campaign or the draft Peter Schiff campaign, the exploratory committee, and saying, yes, I am running now. And so if I do run, I am anticipating doing something like that. But I want to try to do it more economically than what these consultants had pointed out. I really want to spend my money on the campaign. I don't want to simply spend it thanking everybody. And I'm sure that people understand that I appreciate the fact that they're donating to my campaign I'm donating a lot of money and time to it myself. So we're all in this together. We're all making sacrifices to try to elect me to the U.S. Senate. And, of course, I appreciate the sacrifice that everybody makes. And, somebody actually left me a message. I called them back. Somehow they got my cell phone, and they wanted to let me know that they had contributed $1,200 to my campaign, but that was a lot of money for them, and that family would have to give something up in order to make up for the fact that they don't have that $1,200. And he mentioned that, I was the first candidate in his life that he had ever contributed to. And I appreciate that. I gave him a quick call, but, I certainly appreciate, anybody who's making a sacrifice. I know times are tough. I get contributions from people who, are unemployed. I mean, they list their occupation as unemployed, and, they're still sending me money. I had somebody I noticed was a waitress sent me money. And I know that, waitresses don't earn a lot of money, and so, they work hard. And, to send me, I don't know, she sent me $50 or something, but, it's still. And, of course, I appreciate that, even if I'm not, mailing out, personalized thank you notes. Hopefully people understand that I appreciate the donations, and if they didn't think that I would appreciate it, they probably wouldn't do it. But I think the important thing is to use this money as effectively as possible and to try to use it to win a campaign if I run. The field potentially is getting a lot more crowded now. I understand that Linda McMahon, who is the wife of Vince McMahon, who owns the World Wrestling Federation, she's now going to enter the race, and she's talking about spending $25 million of her and her husband's money to try to win the Senate race. Now, that's obviously quite a bit of money to spend. They obviously have more money than I do, owning the WWF, and they're willing to spend it. I think, she's quite a bit older than I am still, and I think maybe she's a little bit bored and looking for something else to do, and, buying a Senate seat is appealing. But obviously there's more people in this race with money. So now if I enter the race, she hasn't officially declared her candidacy yet, but I have it on good authority that she is, in fact, a candidate. So that's 4. If I enter, that makes 5. And I think there are some rumors of a 6th candidate. So it is, there's going to be a lot of people, and I've got to make the most effective use of my funds. But again, as I said, I do appreciate all the contributions. I think it's pretty good. I think we've done a good job. I've raised close to $900,000, and I'm not even a candidate. I haven't had a single fundraiser. And I'm still not spending that much of my time trying to raise money. So most of this money is due to efforts of, other individuals, people not affiliated with me. They've gone on their own. They've put together some money bombs. People have donated to my site. People's friends have donated to my site. And as I said before, I think it would be great if we could get up to $1 million, before I do make an announcement. We're, about $107,000 away. So we're doing a good job. I appreciate what everybody's done. If we can get some more, if we can spread the word, great. We can get this over $1 million. I think that would put me on a pretty good footing to launch a campaign and then really try to kick the fundraising, into high gear, because I know I'm going to have to raise a lot more money than $1 million to be competitive in a very, very highly contested race. Anyway, interesting stuff going on in the markets. We've had a lot of volatility. We had a pretty big decline in some of the Asian markets. I think China, mainland China, dropped about 20%. Hong Kong market not down nearly as much. I think maybe it's pulled back about 5%. And we've had a little bit of a pullback in the U.S. markets as well. On one of the days when the U.S. market rallied, we did have when the U.S. market sold off, we had a rally in the dollar. But the dollar has pretty much given back almost everything it's gained, and it's pretty close to the lows again. And I think the U.S. dollar index is around 78.5 now. It couldn't even get back up to 80 on, the big sell-off in stocks last week. I think oil was up a few dollars today, very strong move up in the price of crude. The commodities are looking strong. The dollar to me still looks weak. As I said, Warren Buffett, wrote an op-ed that was in the New York Times, and I mentioned this in my video blog today. I talked about the New York Times op-ed. But, in addition to, pointing out that we got to worry about inflation, we got to worry about weakness in the dollar, In the same op-ed article, he is praising the actions of the government that they've taken so far to help the economy. He's pointing out that these big deficits are a problem. Well, the deficits are a lot bigger because of what the government just did to theoretically help the economy. He's talking about the danger of having too much dollars in the economy. He's talking about, polluting the economy, I think, with excess dollar emissions. Well, yes, but why do you think there are so many dollars? Because of the bailouts, because of the stimulus, because of all the things that Warren Buffett are saying we needed to do, and they were great, and we should keep on doing it. And it doesn't make any sense, that if you're concerned that we have too much debt, that you applaud all the new debt that we've taken on in the past year. Now, of course, what Warren Buffett is saying is that these actions are why the economy is improving, and that we needed to do this. It was necessary. It wasn't necessary, and it's not why the economy is improving. Air being blown into the bubble. I mean, all of this, all these deficit spending, all the stimulus, the bailouts, it's the government's attempt to reflate a bubble. And yes, they're blowing some air back into it, but that's not progress as far as I'm concerned. That's regress. We don't want to try to blow more air into this bubble. We want to let all the air out of that bubble. We want to build a solid economy, a real economy. We don't want to waste our resources trying to blow air back into a busted bubble, because it's not going to work. And even if it could work, we wouldn't want to do it. Why would we want to go back to that delusional state? But meanwhile, what we're doing is counterproductive, and everything we're doing is going to lead to even more inflation and an even weaker dollar, two things that Warren Buffett says are a problem, that he's warning us about. And there's a lot of people that do this. I mean, the same thing Bill Gross was out with an article today saying that the dollar is going to go down, the dollar is going to lose its reserve currency status, this is a danger, there's going to be inflation. But again, Bill Gross supports all the bailouts, supports all the stimulus. Well, I mean, it's like, trying to have your cake and eat it too. If you're concerned about these things, then you got to be against the current deficit spending. You got to be against the bailouts and the stimulus. You can't think that the short-term benefit, right, is somehow outweighing the long-term costs, because it doesn't. It's just like saying, well, I'm going to shoot myself up with a drug because the high is better, is better than the withdrawal. It's not. This is the myth that has to be shattered, and it's probably one of the main reasons that I would want to potentially be a U.S. senator is to try to get Washington to acknowledge the fact that sometimes things have to get worse before they can get better. That sometimes, the old expression from workout, no pain, no gain. We're not going to have any real economic gain unless we take some short-term pain. And, I don't even think the pain is going to be nearly as bad as a lot of people think if we let the free market work. Yes, I think it means that Americans don't buy as much stuff and they stop shopping for a while. But you know what? We got a lot of stuff. I don't think that's going to be so problematic. Yes, there are going to be some people that will lose their jobs, in certain sectors of the economy. They're probably going to lose those jobs eventually anyway. Might as well, if they lose them sooner, okay, it might be a little bit more painful in the short run. But in the long run, they'll get a better job. They'll get a more viable job. They'll have a better future. I think the greatest increase in pain will be on Wall Street, in the banking sector, in the financial sector. Though that's the biggest recipient of all the bailout and stimulus money. But these are the richest people among us. These are the people with the biggest incomes. Why do we have to make the whole country suffer so executives at financial institutions can continue to rake in huge salaries and huge bonuses? I mean, is it really worth it? Why don't we let some of these institutions fail? The government is trying to convince us that if we let these big banks fail, that all the little people around the world are going to suffer because they're not going to be able to borrow money to go buy a new car. Well, you know what? That's fine with me. Drive the cars that we have. We don't have to try to preserve this phony credit-based economy, and we can't keep bailing out the drug pushers on the basis that, well, if we let the drug pushers go bankrupt, there'll be no more drugs. Well, that's what we want. We don't want any more drugs. So that's great as far as I'm concerned. Let all the people that are pushing all this cheap credit, let them fail. And if it means that, Americans can't go deeper into debt and buy stuff they can't afford, that's exactly what has to happen. Americans have to save their money. and they have to fend for themselves. They can't rely on the government to take care of them. They can't think that they can go into debt, that they can borrow money when times get tough. They can't, the old expression is you save for a rainy day. You don't borrow when it rains. You have savings. So when it rains, when bad times come, you're prepared. In America today, nobody's prepared for bad times because they think if times get bad, they'll just go into debt. That is not a viable way to run an economy. And we can't keep bailing out failed institutions to try to preserve that phony economy because we're only making it worse. And, of course, when the dollar goes down, and I mentioned, too, on my blog, I was watching last week on CNBC, and Mohammed El-Arian was on, and he's at PIMCO. And, again, they are the largest manager of bonds in the country. And he's saying the dollar is going to go down. Long term, he says, there's no question the dollar is going to lose value. But then he says that it's a good thing and that, we shouldn't be concerned about it because the dollar is going to lose value slowly. It's going to lose value in an orderly way. I mean, so somebody tells you, you go to your accountant, and your accountant tells you, well, I looked over your books and records, and it looks like you're going to go bankrupt. But don't worry about it because it's very orderly. You're going, you're losing your money in a very orderly manner. Well, I mean, does it really matter? I mean, if you're going broke, you're going broke. I don't care if it's going to be a swift break, swift, or if it's going to be slow and orderly. I don't want to go broke. I don't want to go bankrupt. And so, if you own dollars, and he's got, all their clients are in U.S. government bonds, if they know the dollar is going to lose value, why would you want to own it? If you know that the dollar is going to go down, then why would you want to stay in dollars and just lose money over time? That's why eventually the dollar decline is going to turn into a rout. It is going to collapse. The only reason it's not collapsing now is because most people don't think the dollar is going to gradually lose value over time. They somehow believe that it's going to stop falling, that it's going to stabilize. But the minute you get a consensus that the dollar is going to gradually lose value over the long run, then nobody's going to want to hold them. No one's going to want to watch their wealth, gradually disappear. Especially when, the yields are so low. I mean, we're paying such a low rate of interest on the dollar. Why would you want to ride that thing out? Also want to mention, too, I mentioned, I think, last time on the show that we had launched our mutual fund at Euro Pacific Capital. We now have the Euro Pacific Capital Halter China Fund, which started trading about a week ago, EPHCX. EPHCX is the symbol. If you had to be following that fund, you noticed there was a big move up, 6.2% today. The reason for that is because the NAV was calculated wrong a few days ago, and so it recorded a drop that it never should have had, and so now it's kind of gaining a lot of that ground back because most of the fund was in cash, and I think the accountants misread something or key punched something. So people who bought the fund, I believe, over the last week, most people are going to get a new confirmation adjusting the number of shares to reflect a more accurate pricing based on what the real NAV was when their shares were purchased. But remember, the China fund, I mean, we're looking for a long-term exposure to the Chinese market. Somebody mentioned that, maybe Schiff is, it's bad market timing. He's coming out with this fund, right as the market is starting to drop. We had a big move in China. The market doubled, and now Euro Pacific Capital launches their fund. It's not like the market doubled and I decided to launch this fund. We actually decided to launch this fund around the lows for the Chinese market. It just takes a while to get it all going. I mean, there's a lot of hoops you got to jump through to get a mutual fund off the ground. There's a lot of regulatory hurdles, so it's not that easy. So the market happened to go up, and I think the fact that we're getting a correction right now is great because it's allowing us to buy, on a pullback. I have no idea how big the pullback's going to be, and ultimately we're going to commit the cash into the market. I mean, we're going to do it, orderly. But I think it's a great thing that we're getting some weakness. But you can't look at this in terms of a year or 2 years or 3 years. I mean, the China theme, I think, is going to be here for a long, long time. And I think that the main growth in the Chinese market and the Chinese economy is ahead of us, not behind us. I think when the Chinese really, depeg from the U.S. dollar, when they really allow more of a free market economy with a free market monetary system, when they have their own monetary policy, when they don't, import ours and have to tax the Chinese economy in the form of this currency subsidy for the U.S. dollar, so that Americans can enjoy a higher standard of living at the expense of the Chinese. When I think they correct that, I think it's going to usher in a huge, huge economic boom in China. And that's what we want to be invested for. I mean, we shouldn't even be concerned, really, about, where the Chinese market is from day to day, month to month. You really got to think about this in 10 years from now, 20 years from now. I'm hoping that I still own my shares. I mean, I put money in the fund myself, and I want to own it a long time from now. Meanwhile, we're investing in dividend-paying stocks. You can get a dividend on it. We're going to be the dividends can be reinvested, of course, but if you need the income, you can have the dividends paid out to you. But you really got to be looking at this as a long term, and you've got to be realizing that it could be pretty volatile. I mean, it's probably going to be more volatile than general portfolios that we have, because it's concentrated in China. It's a volatile market. It's going to be a bumpy ride. As I said, I think last time, an amusement park, this is not the merry-go-round. It's going to be the roller coaster. But I think you're going to have a lot, more fun on the roller coaster, even though it's up and down and it might be pretty scary at times. But so like I said, if you want to get more information on this fund, call your Pacific Capital broker, get a prospectus on it. But again, it is a risky fund. It's for people who are not going to be worried if there's a big drop in the NAV of the fund. And don't put money in this fund if you think you're going to need it in the short run. At least the principal. If you want income, fine, you'll get income. But don't put money in if you think you've got a short-term time horizon for getting your money back. And that's again what investing is all about. It's the time horizon. I mean, when you own an asset like a stock, you never know what's going to happen in the short run to the price. Prices are very volatile at times. It depends on all sorts of circumstances beyond your control. And of course, the shorter the time window that you have, the higher the probability that the market could be down when you need your money. But if you have a long and you don't have to pull out your money, if you could take out the money, when it's favorable to do so, not because you need to, well then, you have a much better chance of being successful in the stock market. You could certainly get lucky. I mean, you can put money in the market for a year and it could go up, and maybe you caught it right. You could make money, but there's a big risk that you won't. Now, some people can say, well, I want to buy stocks because I can get a 7 or 8% dividend, and that's better than getting 1 or 2% in the bank. It is, provided that you don't have a short time horizon. As long as you can leave the money there and you're buying value, yeah, of course, you're getting a much better return. But the problem is if you have a short-term time horizon, what happens if you need the money in a year? Well, what happens if the stocks are down 10% or 20%? Well, the fact that you got an 8% yield, that's more than offset by the loss of principal because you had the short time horizon. So if you've got a short time horizon, then you've got to stay out of the market. I had a client who recently emailed me saying that I had talked about the fact that we had clients that over the long run, they were doing well, even though there are clients that are still down because of what happened in 2008. And he sent me an email saying he begged to differ, that he's a long-term client. He's been a client for almost 15 months, and he's still down over 30%. 15 months is still a short-term horizon when it comes to the investment business, especially when you invested a year ago in front of the biggest global stock market decline in history. A year is not enough time to recover from that. Now, maybe this particular client, I don't know the case, maybe he added to his account, which would be great if he took advantage of the decline and sent more money in or reinvested some dividends. The fact that he was still down a little better than 30% led me to believe that he didn't do that. He probably just put some money into the account and hasn't really done anything with it since, although I'm sure he's collected some dividends, and that's probably part of the return. But, and people, I had a client recently, I had to look up this account because there's somebody that was upset about their brokerage account. But, and she's complaining about, the losses. And meanwhile, I had to audit the accounts. They had like 5 different accounts, and they were clients since late 2004. And it turned out they actually made money. The S&P was down by 35% since they opened their account, and they had a positive return. They didn't even lose during that period of time. They were actually ahead. Yet all they can think about was how much money their account dropped in 2008. Well, the fact that they were still ahead after that huge drop, showed that, hey, obviously the account was doing really well leading up to 2008. But, year to year, you don't know. You're in a stock market. You're getting dividends. I mean, this, you can't get hung up on what happens in 2008. Now, this particular client, I think, transferred their account out, and that's why they're all upset in 2009, in early 2009. Of course, many of those stocks, and of course, when she transferred out, I'm only measuring that this account was ahead based on when they transferred out, when the market was still a lot lower than it is today. I don't know what they did with their stocks. If they still held them, then they're in even better shape. But the point is, you can't. I mean, I think they got nervous because the market went down, which is why they transferred out. But they forget about the fact that the stocks were doing well for the few years before, and they went down. But if they just have to focus on a longer term picture. Where's the account going to be 5 years from now? These women, I mean, they had, they're in their 50s. I mean, this account could be client for a long, long time. You can't be focused on the short term volatility. You've got to understand what you own and why you own it, and understand that it's very difficult to try to figure out where the markets are going to go on any given day. You can do it occasionally, but I don't think anybody can do it consistently and get it consistently right. In hindsight, it's really easy to know exactly what you should have done. But, to make those decisions in real time is a lot more difficult. And I think that if you focus on value and understand the big picture and understand the real inherent problems facing the U.S. economy and what's going to happen to the U.S. dollar, just like guys like Warren Buffett and Bill Gross will acknowledge that the dollar is going to go down. The only question is, how much value does it lose? Unfortunately, it's going to lose a lot of value, I think, based on what the government is doing. Unfortunately, based on what we've already done, the dollar has to lose quite a bit of value from here. But if we would just stop doing this, then there would be some floor underneath the dollar. Right now, there is no floor. It's a bottomless pit because the government keeps making the situation worse and making the dollar's future that much bleaker. Anyway, let me quickly go to the phones. I didn't realize I've been talking for almost half the show. First, a potential constituent, David in Shelton, Connecticut.
Hi, Peter. Thanks for taking my call.
Thanks for calling.
I hope to be a future constituent of yours. I try to contribute every payday, send you something, and you can keep your thank you notes, put the money into your campaign. You can thank me when you get to Washington by doing a good job. My question is in regards to gold. I have about 10% of my assets in gold. Unfortunately, they're all numismatic coins. I was wondering if you could speak about the difference between the numismatic and just holding gold bullion, the risks there are of the government maybe confiscating it like they did in 33, like Roosevelt did, and if you would advise me to sell them and trade them in for just bullion.
Well, it's difficult to say. I don't own many numismatics myself. I have a few coins, but that's a different business. I mean, that's rare coins and understanding. It's like buying numismatic coins is no different than buying art. Buying rare paintings or buying other types of memorabilia, whether it's autographs, letters, baseball cards. It's more of a collectible. It's not really. I mean, I don't know how much of an investment it is. I mean, because certainly, if you've got old masters, you've got a Rembrandt, you got a Van Gogh. I mean, these things have some real value because they are rare. There's not that many of them, and they're nice. I mean, obviously, you can almost reproduce one of these things. I mean, if you go to some of the people who paint, who can copy, and they can make copies of a Rembrandt or copies of Van Gogh or Monet or anybody. And to a non-professional, you couldn't even tell the difference. I mean, so hanging on your wall, it doesn't really make a difference whether you have the original or a copy. But obviously, there is a value there, and you can preserve wealth if you own something that is always going to be in demand. But
you don't really. Do you advise those type of coins as a hedge against inflation or a dropping dollar, or would you rather go with the bullion coins?
It certainly is a hedge. It certainly is a hedge, but there's a lot of other elements to it. If you're really concerned about inflation, and that's why you're buying gold, you should not be buying numismatics. You should be buying bullion because you get a lot more money. Let's say you buy one coin, a numismatic coin. Let's say it's a rare coin and it's an ounce of gold, and you pay $10,000 for that coin. Well, you paid $10,000 to get 1 ounce of gold. Well, you can get 10 ounces of gold if you just buy, bullion coins. So you're betting on what's going to happen to the value of that rare item. Now, if there's a really bad recession, then, in my opinion, people that have a lot of rare coins might be putting them up for sale because they need the money, because they've had problems. So I don't think that in a real recession or depression that having collectibles is necessarily a good thing. I think it's a good time to buy those things. I think fine art and other collectibles could become very inexpensive in terms of bullion during a major economic downturn. Now, if I was going to buy rare coins, I would want to buy Chinese rare coins. I mean, I guess you think what happens is, let's assume that the average Chinese citizen gets a lot wealthier, and he wants to have a coin collection. Well, what kind of coins is he going to want to collect? Does he want to collect American coins? Maybe, but maybe he'll want to collect Chinese coins. Maybe it's the Americans who are going to be putting their rare coin collections on the market because they need the money. So that's my take on it. And I'm in the process. I haven't set it up yet, but I am in the process of setting up a separate company so that I can sell physical precious metals. And I've got a contract I've signed with a distributor to make sure that I have an adequate supply so that I don't have to sell my coins at big premiums. I mean, I think ultimately we might be selling gold and silver coins. People will buy them maybe, 4 or 5% over spot, including my commission. And that would be legal tender coins that you can buy, not legal tender in the U.S., but let's say legal tender in Australia. And, so you'll be able to buy an ounce of gold in a refined coin and maybe pay 4 or 5% above the spot price of gold and get a very nice, highly recognized legal tender coin. And so that's what I want people to have. I want, to maximize the ounces of gold and silver. As far as confiscation, yeah, there is an argument that maybe the U.S. government will exempt from confiscation U.S. coins, but who knows? I mean, if they're going to break the law and confiscate gold, which is already illegal, then how do you know what they're going to do? But hopefully that answers your question.
It does. Thank you. Thank you very much.
Thanks for the call. Next up is Bob in Muskogee, Oklahoma.
Hey, Peter. This is Robert, or Bob.
So you
want to call me that.
So you're actually an Okie from Muskogee?
No, I'm actually originally from Arkansas. I just happen to be living here for the last few years, but hopefully not too many people of your listeners will make a connection with me.
Anyway, what's on your mind?
Anyway, I've got a couple of thoughts. I sort of subscribe to the Richard Russell theory that the government won't actually seize our gold again, that they're actually encouraging us to have it to mitigate against the falling. I'm more concerned they might actually seize our IRAs and force us to buy treasuries or U.S. government bonds or something like that instead, sort of an Argentina scenario. Do you see any possibility of that?
Yes. I mean, I wouldn't put anything past this government. I already know that if you want to give up your citizenship right now, you pretty much have to surrender half the value of your IRAs and your pension accounts right now. So the IRS and government already looks at your IRA or your pension as if, part of it is their money anyway. They said, well, we gave you a tax break when you accumulated, so we have an ownership interest in that account. So, they might be able to find a way to regulate that account or what you do with it or things like that. So, yeah, I mean, look, the worse the economy gets, the more problems the government creates, the more, power they're going to usurp, the more of our rights are going to be surrendered. That's one of the reasons, again, or the main reason that I would want to be in the Senate is to try to stop this, because I recognize if we allow this to continue, if the government keeps making the problem worse and then increasing its size and putting on more regulations and more laws because the problems got bigger, and then all those new rules and regulations then make the problems even worse, which means they can regulate even more. This is a self-perpetuating death spiral of economic misery and tyrannical government. And the sooner we could try to put a stop to that spiral, the better.
I agree, and that's why, even though I live out of your district, so to speak, I made a contribution to your campaign that hopefully you'll run as a candidate, make a difference, and get things changed or on the right course again. But I have a second question, and that's a lot of the Elliott Wave people are talking about, or throwing around a term they call grand supercycle bear market depression, where a catastrophic crash in the U.S. market could occur within the latter part of this year or earlier part of next year. Do you have any thoughts about that, what the Elliott Wave people are saying?
Look, I mean, I don't know. I have a lot of respect for Robert Prechter. I think he's a bright guy.
Dr. Robert
but,
I think, is the guy that...
Well, Prechter's the guy that I know, and he does Elliott Wave. But, look, the U.S. market could crash. Sure, it could crash. I mean, the U.S. economy is a mess. The stock market is overvalued. I mean, people could wake up to reality any day. But I tend to think that with all the money that the Federal Reserve will print, that I think a 1930s style, 80, 90% decline in the Dow in nominal terms, I don't think that's really in the cards. Could the price? It's more likely that what you're going to see is the price of gold go ballistic, and so therefore the stock market will crash in terms of gold, but it will be with the price of gold going up, not the price of stocks going down. And I think the dollar could crash. I don't think there's any way that they could fend off a crash in the dollar, and that's likely to happen. The bond market could crash, the long end of the bond market. But there are a lot of problems. But I think the best thing to do is to be out of these U.S. assets because there is so much risk. Because one way or another, you're going to lose your value. Either the stocks are going to go down, the bonds, or the real value is going to go down because people are going to get wiped out through inflation.
Well, I agree. And a final thing, I'm very interested in the new China fund that you're putting together, and wondering if it has any plays in rare earth metals, which is supposedly becoming very, very interesting to...
yeah, there are some Chinese companies that I know that we've owned that were involved in rare... I think I own some China rare earth is name of one of the stocks I've owned. But, yeah, I mean, look, this stock is going to be China-focused, so it's going to be investing in Chinese companies, some of which could be involved in rare earth-type metals. But, as I said, we're slowly moving the money into stocks now. We've got a few positions on. We're putting more positions on tonight. So it's a building process. I think we've only got about $6 or $7 million in the fund so far. So it's a very small fund, but it was just launched. And right now, it's only available through Euro Pacific Capital. So you can only buy the fund through Euro Pacific Capital. At some point, we will start signing up dealer agreements, and the fund will be available through other brokerage firms. But right now, it's pretty much only available through us. But, it's great for smaller accounts. People can make a small investment and get a lot of diversification and have me, helping to manage the fund.
Well, I have an account through your firm, through Los Angeles office, and I just want to say in your defense that within the last 6 months, I opened the account with a little bit under $200,000 and up over $50,000, partially due to good timing, you might say. So I'm very pleased with Euro Pacific.
Thanks. And again,
my account. And
it is the timing. I've got an email today from a client, and he sent me an email, and he basically says, do you have a sell discipline? ? I'm slowly seeing my gains melting away. And the advice. And again, that gets back to what I talked about earlier. People are watching their accounts too closely, and they're keeping score. So maybe somebody puts in $100,000, and then they see their accounts at $130,000, and then it goes down to $225,000. They're saying, "Oh, my gains are melting away." Don't even count the gains. I mean, the best way to think about it is don't even, if you open up an account and it goes up in value, don't start spending that money as if you actually have more money. Pretend that it hasn't gone up in value at all. Pretend it's the same $100,000 you started with. Because the stocks are the same. Nothing has really changed. Sure, the short-term prices change, but it doesn't matter. And I want my clients to feel the same way in reverse. If you send in $100,000 and it goes down to $70,000, don't think about, oh my God, I lost $30,000. It's the same stocks. All right, you can't be so short-sighted. It's constantly. I tell my clients, look, don't even look at your account statements. I mean, on a short-term basis. I mean, look at them for accuracy.
I think we all believe that. It's just that we're all so spooked by the amount of volatility that's now in the market compared to 10, 15, 20 years ago when we first started getting interested in the market.
Well, I think there is a lot more volatility now, and I think unfortunately it's going to be there, and it's going to be a blessing and a curse. It's a blessing because it lets you buy into some of these big dips and get incredible bargains on stocks. It's a curse because, for some people, it forces them to do the wrong thing. It scares them out of the market, but you have to understand that, yes, things are volatile right now, and they're probably going to stay volatile. But in my opinion, there's nothing that you can do about it. Because if you want to escape the volatility by keeping your money in the bank, A, you're going to have no return because the interest rates are lousy, and B, eventually you're going to go broke because the dollar is going to collapse. So either you accept the volatility and survive financially, or you avoid the volatility and go broke. I mean, that's the way I see it. People, obviously other people have different opinions than I do, but I'm so confident that I'm right in the long term that the volatility doesn't bother me. I mean, when my stocks go down, all I'm looking at is, can I buy more? Unless, of course, there are exceptions. We have bought some stocks where the fundamentals really deteriorated and the stocks actually went down for reasons unrelated to just pure market volatility. And that's a bad investment. I mean, nobody is perfect. You're going to buy bad stocks. That's why we diversify. We've got good stocks. I mean, there are stocks that are up 5 or 10-fold. And you want to get those in your portfolio too, because that's fantastic. And you get one huge winner, and that pays for quite a few mistakes. But you're never going to get them all right, and that's why diversification comes in. Because if you do pick a bad stock or two, at least you got plenty of good stocks to make up for it.
Okay. Well, thanks for taking my question, and good luck with your political exploration movement.
Thanks a lot.
Okay,
Next up is Chillian from Greensboro, North Carolina.
Oh, hi, Peter. First-time caller. Happy customer.
Thank you.
I'm actually calling to deliver a personal appeal to you. I hope you will seriously consider getting on the Ed Morrissey show and talk about healthcare, talk about economy, and policy. Before I go on, do you know who I'm talking about?
No, I don't.
Okay. Morrissey is a conservative commentator, conservative blogger working for hotair.com. And I've been following him for over 5 years. A very fair, a thorough person. And about a week and a half ago, I got a nice surprise. He posted your interview with Lawrence O'Donnell on the Ed Show on MSNBC, and he analyzed it, showed it, and ripped Lawrence O'Donnell to shreds and explained why. And I actually believe he might have sent you an invitation to get on his show. He has a radio show 6 days a week.
I don't know if I got one. I mean, I can't recall, but I mean, if you know him, if you say, hey, if he wants to send me a request, generally whenever I get an interview request, I forward it to the guys at my company that handle my booking and my scheduling. They will look into the show, see if it's the right forum for me, if it makes sense for me to appear on it, and if so, they'll contact him and book something that fits into my schedule. So if you know the guy, tell him to drop me an email and requesting that I appear on his show, and we'll see if I can if it makes sense and if I can work it in. But I think that interview with Lawrence O'Donnell, a lot of people have seen it. I mean, there's one YouTube of it, I think 60 or 70,000 people have seen. Another one, it's over 20. So it's close to 100,000 views on two. But there's got to be probably 40 or 50 YouTubes of that interview. So, I mean, I'm sure maybe 150, 200,000 people could have seen this Ed Show interview. I mean, that's certainly more people that have ever seen any Ed Show in the history of the Ed Show.
Right.
So I mean, and so I'm getting a lot of publicity from a bad interview. I wouldn't have gotten anywhere near that kind of publicity if it was a good interview.
I actually wouldn't call it bad, because
maybe bad in that
information they don't want you to talk.
Just bad from the point of view as the interviewer, instead of actually asking me questions and then waiting for me to respond to actually get my opinion, he asked and answered his own questions. He'd ask a question, and then he'd answer it for me with what he thinks I believe, Instead of I'm sitting right there. He can actually get my opinions. Instead, he wants to put opinions into my head. He wants to put words into my mouth because he thinks if he does that, he'll make me look bad and sound bad.
Right. Well, if you're going to take on Chris Dodd, all those news outlets are going to give you everything they got. And one of the reasons I'm calling, for the first time is I just want to let you know that bloggers like Ed Morrissey and his network of allies, they are the premier fact checkers of the nations now. Better than any mainstream media, better than Fox News even. And they're gaining critical mass.
Well, I'm good. Look, the internet is
over 1 million hits per day. So if you want to get your message out, and have a conversation, they have the resources, they have the space. You can get your message out in writing, in audio, and in video.
All right. Well, great. Well, the internet is certainly, making it easier to disseminate information and to bypass, the conventional media. So as I said, if you have any connections there, drop them an email, tell them to email me, Schiff@Europac.net, and I'll look into it. Anyway, thanks for the call. Next up is John. Oh, I didn't realize this. Are you calling from Utah?
Yeah.
Go ahead, John.
Hey, before I get started, let me just say congratulations. I hope congratulations on your campaign, and if you will send an Acorn van out here, I'll come vote for you.
You have to become a Connecticut citizen, a resident, and then
not
register Republican.
Not with Acorn, you don't have to. Those are trivialities. The second thing is congratulations on being mentioned in Meltdown, Tom Wood's book. I think that's great. I don't know if you've read that, but
yeah, I have. It's a good book. It's a good book. I recommend it on my reading list on my website. And we've actually got a special report that Tom Woods did specifically for our company, The Truth About Obamonomics. It's a white paper on my website. And if you haven't downloaded it, check it out. It's pretty good.
I'll do that. Thanks. Hey, I had a couple of questions for you, but we're running short on time, so I'll just ask you one. One of the questions I have with regard to hyperinflation, which is something that I share with you thinking that it's the most likely outcome of where we're headed, is that hyperinflation tends to culminate in a wage price spiral. And I just I can't envision wages getting out of control in this country because of global constraints and things of that nature. Do you see any other way that we could have hyperinflation where just maybe the wealthy bankers would get all the money, or I don't know how it would work exactly.
Well, I still think hyperinflation, is not, the most likely scenario. It's just the worst case scenario that does have a probability that's greater than zero. And I think that probability is a lot higher than people would think. But I still hope that we do the right thing before it gets to that point. But certainly, even under the best case scenario, prices are going to rise rapidly. Wages are also prices. They just are the price of labor as opposed to the price of eggs or gasoline. And the way I think it's going to happen is that as prices rise, wages will rise far more slowly than will other prices, so that the average standard of living of Americans will plunge, and that the real wages that Americans earn, which is wages adjusted for the cost of living, will drop dramatically. But I still think that wages will rise in nominal terms if we get a lot of inflation. They'll have to. But they're not going to keep pace with other prices that are rising much faster. And that is going to be the big, big problem. And there are a lot of people out there that think that we can't have a big increase in prices without a big increase in wages. Yes, we can. It's very easy. In fact, in any kind of hyperinflation scenario, that's exactly what happens.
That's right. I agree.
All right, anyway,
okay, I'll let you go. Thanks.
All right, well, great. I appreciate the call. Let's have time for one more caller, Ken in Delaware. Go ahead, Ken.
Hi, Peter. My question is, do you envision a scenario in which the dollar collapses to the point where people are bartering using gold and silver?
Well, I think that could happen. That's certainly a possibility. I don't even look at it as I don't even look at it as barter.
Okay.
I look at barter as if somebody trades 3 chickens for a pig, right?
Right.
If you're paying in gold, then you're using money. I don't think that's bartering. I think it's you're just using real money as opposed to fake money, as opposed to Federal Reserve notes.
Right.
And I certainly think that might happen, especially if we get the real runaway inflation and if we get price controls. If the government tries to combat the inflation by controlling prices, then you're going to have shortages, you're going to have black markets, and of course when people are dealing in the black market, they very well might deal in precious metals. They may deal in gold and silver. They may deal in euros. I don't know what they're going to use.
Would a grocery store, would any kind of store begin to just buy and sell using gold and silver only?
Well, I don't know. The government would probably make that illegal, would be my guess. And so if you're going to buy it, it's going to be behind the grocery store, illegally. There'll be a truck back there. Because I think the government won't allow that. But, I mean, initially they might. I mean, but the government tries to clamp down on those sorts of things. But eventually, see, if the dollar is losing value so rapidly, people are not going to want to sell their merchandise. I mean, let's say I'm running a store, and prices are really, the dollar is really falling. I know that if I sell you, a widget, and you give me $10, if I want to go and buy another widget to replace it, it might be $20 or $30 by the time I can get the order in there. So then people start pricing, aggressively, knowing how much value the dollar is going to lose. And, of course, that's what happens when you get to the hyperinflation and there's a complete loss of confidence in the money. Nobody wants the money. Nobody will hold the money. The minute you get it, you get rid of it. That's when it just completely collapses and you get, the $100 trillion bills that they have in Zimbabwe.
Right. In your Chapter 6 of your bull moves and bear markets, you have parting words where you give your recommendation for a portfolio, especially with gold and silver. Would you, that's page 129, would you say, based on what you know now today, you would recommend those same things, those same parting words?
Yeah, I mean, I don't think anything that I wrote in that book has changed as far as my long-term investment advice.
Very good.
And I was on, I think one of the Fox shows, I think it was today even, and the host, they mentioned him in the interview. Look, you're going to potentially be running for office, and you're so negative. Why is anybody going to want to vote for you with this big negative message? I mean, you need to be positive. And the reality is, I am positive about a lot of things. And I'm only negative about the U.S. economy because I understand the consequences of the policies that we're pursuing. If we could change our policies, if we could change course, then I would be optimistic. Right. The reason I'm not optimistic is because we're not doing that. And nothing has happened to indicate to me that we're going to do that anytime soon. Now, obviously, if I'm going to run as a senator, I'm going to try to present a positive alternative to the bleak future that I see if we don't change. It's kind of like, we're in a war. We're losing this war. Our factories are gone. Our savings is gone. We're in this gigantic hole. We have a lot of work to do. And it's not much different to maybe what happened in Germany at the end of the Second World War. They lost their savings. They lost their assets. They got bombed. The country was in ruins. And half of it went, East Germany and West Germany. And West Germany, flourished, and in East Germany stagnated because one went more towards capitalism and freedom, and the other one went towards socialism, statism. And so, if you were an East German and you saw what was going on, in 1946, 1947, 1990, and you could have said, look, the future is bleak. This is terrible. If we follow this communist government, and yes, it was a very bleak future because of what they did. But had they, been able to follow the West German model, had they had that choice, then the future would have been very bright. And that's the same thing I see here. I mean, we're at a crossroads. I'm going to try to present a vision that, look, we could have a bright future. Now, it's not going to be a future without any problems. We have some problems, right? Just like, if somebody is overweight and I'm trying to give them a pep talk that, look, I can get you into shape. Let's say I'm a trainer. You can get into shape. You can have a great body. You can get healthy. It's all possible, right? But first, you got to cut out the junk food and you got to exercise, right? And if you do this stuff, then you can have the body that you want, and you can be physically fit, and you can do all that. So America can do that. We can have a vibrant economy. We can have a growing economy. We can have a bright future. But first, we got to do the tough stuff, right? We got to that diet. We got to hit the gym, and we got to eat the salads. We got to do the right things. And you can be optimistic. But what I'm saying is, if we don't do that, if we keep eating junk food, and we just sit on the couch, then we're never going to be healthy. We're never going to have that fit figure, the fit body. And that's my point. And that's why I'm so negative on the future, because I understand the consequences of what we're doing. And that's the reason that I would want to go to Washington, because I understand how bleak those consequences are, how dark this future is, and I know it doesn't have to be that way. We can change it.
What if things happen before you have an opportunity to even enter the elections for 2010? There's talk among conservative radio and blogs about a second American Revolution. There's even talk about rebellion, peaceful rebellion by refusing to pay taxes. It's called Starve the Beast. Do you see anyone crossing that line?
I don't know. I mean, look, even if we starve them, they'll keep printing the money. I mean, so they don't really care. I mean, they've already shown that their spending is not restrained by their tax collection. I mean, look at the states now. I mean, now a lot of the state governments are getting a lot of money. The federal government is printing money for the states. They're printing money for themselves. They're printing money from everybody. And, I don't think there's a lot of big tax hikes on the horizon. I think the tax that we're all going to be paying is inflation. Now, I know one thing. I'm not paying that tax because I don't own any dollars. As soon as I earn them, I get rid of them. And I don't spend them. I convert them into hard assets abroad. I buy foreign stocks. I buy precious metals. And that's what I'm advising my clients to do, because I understand how destructive this tax is going to be. It's destructive on the nation, but it's destructive on individuals. And so I'm trying to do all that I can to help as many Americans preserve what wealth they have.
So the main thing is to run from the dollar and run toward your Chinese market and gold and silver and anything foreign currencies, but just get out of the dollar.
And, of course, while I'm preparing for the worst, I'm certainly hoping for the best. Sure. Now, I'm not, just going to blindly hope that things get better. I hope that we can turn the situation around, which is why I might run for office, because I think it's only going to turn around if somebody like me or other people like me get into office, because it's clear that the politicians that are in Washington right now either don't understand these problems, or if they do, they're not going to do anything to solve them. They're simply going to keep making them worse, pursuing their own self-interest, their own reelection, and trying to help out the fat cats on Wall Street that help keep them in power. Anyway, I think we're starting to run out of time. I got about 1 minute left. Thanks, everybody, again. Remember, if you want to support my potential bid for the U.S. Senate, go to shiftforsenate.com. Make a contribution. Contribute as much as you can. If I don't run, the money's going back. Make sure, if you're interested in getting a prospectus, learning about my new China fund, or learning about making any kind of investments at Euro Pacific Capital, adding to your account, opening up a new account, call us up, 800-727-7922, 800-727-7922. Tell your friends as well. I think we are ultimately running out of time here to do the right thing, to get out of U.S. assets, to get out of the dollar. As I just said, we can hope for the best. No one wants the best more than I do, but we've got to plan for the worst. We've got to be realistic about what the politicians and the central bankers are doing to our country and our money. Thanks, everybody, again. I'll be back again next week for another episode of Wall Street Unspun.